It's that time of the year again when the stock market doom merchants are at their most vocal as they focus on the historic apex of the darkest day of the darkest month for stocks of the year, October the 19th. Today is the 30th anniversary of the 1987 Black Monday that saw the stock market crash by an unprecedented 22% in one day. That few saw coming, but ever since many have prophesied the repeat of each October, regardless of what the stock market has actually done thus far each year, as the perma-bear crowd can always be seen literally jumping up and down like demented rabbits, proclaiming that a crash is once more imminent, pointing to a myriad of harbingers of the imminent stock market apocalypse, against which the historic record paints a picture of a coin toss having proved infinitely more accurate than the perma-crash's coming calls, awaiting their broken clock moment to proclaim their success. So it's no wonder that October tends to be an unusually irrational month for stock market expectations, and even more so for this year, given that the Trump-inspired delusional rally has relentlessly risen in the wake of Fed tightening and harbingers of a real nuclear apocalypse, as I've covered at length in my Trump Reset War on China series, in respect of which the Chinese Emperor Xi Jinping's latest statement made in front of 5,000 Communist Party members effectively laid out the blueprint for what to expect from the emerging Chinese economic and military global empire. So the trend that I warned of near a year ago is most definitely still in motion, as the world's existing empire, the United States, and the emerging Chinese empire are heading towards an inevitable conflict that will probably turn nuclear, where the North Korea saga of recent months is just one sideshow consequences of. I'm sure that the 30th anniversary of the stock market crash will keep many viewers and readers busy on reams and reams of garbage produced by those who were never there in the first place, and for the few who were there, never traded the stock index futures on that day, and for those who were active market participants, were like 99% of traders on that day paralyzed by fear into a state of inaction. That leaves perhaps a mere handful who both saw the crash coming, then traded it, and most importantly profited from it, as Trump would say, beating it badly. In which case, do watch my earlier video for what happened in the run-up to and on the day of the great crash of 1987, of how I managed to foresee, trade and beat the 1987 crash that provided very valuable real-world trading and investing lessons that are just as valid today as they were 30 years ago. So once more, the doom merchants are peddling their perma wares, despite the fact that even if this time stocks do by chance crash, that every crash in the general stock market indices such as the Dow, S&P and FTSE have always resolved in the mother of all buying opportunities. That is the key lesson learned in the aftermath of the 1987 crash. For following the crash there was widespread prevailing perma doom, and it did not just persist for a few weeks or a few months, but for a good 9 years. That's 9 years of perma doom in the face of a relentless bull market that climbed a wall of worry which long since passed its 1987 peak all the way to Dow 6000 and beyond. And this is why for this 9-year-old bull market I have consistently iterated that where the general stock market indices are concerned, the greater the deviation from the stock market high, then the greater the buying opportunity presented, which is the primary lesson learned in the years that followed the 1987 crash. Which is why I love Black Mondays. When others are panic selling, my mind's on what to buy. However, there is a downside to this mindset which this year illustrates. For I had concluded that having a lunatic in the White House would present fellow stock investors with such an ideal buying opportunity. a significant deviation from the bull market high. So having reviewed the technicals near a year ago, I penciled in with a fair bit of confidence for up to a 20% deviation from the bull market high during 2017. Unfortunately, such a buying opportunity has failed to materialize, which is the nature of the beast, for the market isn't going to give away easy money. You have to work for it, and unfortunately I was distracted by Brexit and Trump, and I clearly failed to work hard enough to understand what the market was trying to tell me were its intentions for 2017. It happens. And one spreads oneself thinly, i.e. focused on first Brexit and then Trump instead of stocks, then the market won't be forgiving for being distracted. At least the pain has been more of one of missed opportunity rather than suffering a depreciating account balances. That, I assume, must have been the fate of the perma bears this year. That is, if they ever put their money where their mouths are. So yes, 2017 has been a disappointing year, as the anticipated buying opportunity never materialized. So it looks like I got this stage of the mega stocks bull market wrong for 2017. However, so that there is no confusion, we remain in an exponential megatrend stocks bull market, courtesy of key megatrend drivers that look set to drive the general stock indices into the stratosphere, as I covered over many years, such as the inflation megatrend and my more recent series on machine intelligence investing articles and videos, as my first video in the series illustrates. And where trading is concerned, I aim to create 2 videos that will cover the real secrets for successful trading and investing. So ensure you're subscribed to this YouTube channel for notification of these. Your analyst missing boring old Obama, which allowed one to focus on market analysis and concluding trend forecasts rather than politics or the chances of a nuclear war.